Hello, Bernd. Can you hear me?
Hello, hello, hello. Microphone, speaker. Yeah, should all okay.
Can you hear me? Yeah, it's okay.
Yes, yes, I hear you. Perfect.
Можем начинать, запись идет. Bernd, before kicking off, let me introduce us. We are the biggest traders community in Ukraine, based in Kiev. And a lot of our students, the majority, I think about 80% of our students, are the ones who are trying to fund their deposit using instant funding challenges. And you are very well known inside our community as a wide-known trader. So today, we'd like to ask you about your way, the way you came through, and the way you are doing these trades. So first of all, please, can you introduce yourself and tell us a little bit about your way of trader?
Yes, so thank you for the nice introduction. And I didn't know that I'm well known in your community. It's quite nice. So my name is Bernd Skorupinsky. My name is Bernd Skorupinsky. I'm originally from Germany, but I live in Dubai since now 2009. So since, well, 15 years almost. And I'm trading since 12 years and I'm full-time trading, providing for my family. I'm 40 years old, but I'm 40 years old, have a 9-year-old daughter, and I'm trading full-time, providing for my family since 10 years. So I consider myself a multi-asset trader, actually, and I trade all kinds of asset classes. I started actually trading stocks, then I went into trading real futures, and then just a couple of years ago, I started trading Forex, so all the CFD market basically. And then I ventured into prop trading. And now I manage in total, well, status quo as we speak, I manage $4 million in prop-firm capital. $2 million is booked, which is real funds. And I'm also the all-time FTMO record holder with 120 leaderboard experience.
Okay, that's the main point. You are here, and we'd like to talk about it. First of all, previously, before heading into this interview, we saw a little bit about your previous interviews, and you told the same thing, that you are a multi-asset trader. For our community, of course, we know that you can watch as a fundamental trader, as a technical trader, different markets. Inside our community, there are a lot of traders who both trade through the technical analysis, who are more fundamental. Me, myself, a little bit more fundamental, because I use graphs a little bit. I trade more like a fundamental trader, but still, first of all, the main interest from our community is what kind of information do you take in your consideration before opening some trade? So is it a capital inflow, outflow? Is it a correlation between assets? Tell us a little bit.
Recording in progress.
Yes, so I developed basically my own strategy. So I would say I kind of use the best of both worlds. I use fundamentals and I use technicals as well. And I call it a two-step mechanical process, two-step mechanical process. So step number one is I want to get biased in a market, whether I'm going to be bullish, bearish, or neutral to a certain market. And for that, I look at fundamentals. What kind of fundamentals? I developed, or not only me, my entire team, we developed proprietary fundamental forecasting tools. I don't like the word, and I said this in previous podcasts as well, I don't like the word indicators, because indicators are derived from price. Price is usually lacking. So price has to move first for the indicators to follow. So you're always late to the party. So that's why my fundamental indicators or my fundamental forecasting tools are basically derived from fundamentals and based on my belief system, fundamentals drive price. It's pretty loud.
1 second. We have someone here in conference didn't turn on their microphone.
I think I'm unmuted. Yes, and now it's quiet. Yes, yes, hello.
So let's proceed. Yeah?
Yeah, it was really loud. Was really loud. I couldn't hear myself. Yeah.
So you've told us about a fusion of technical and fundamental and your two-step strategy.
Yes. But if I can just jump in here, just to finish what I wanted to say is basically, so I use my fundamental tools that I can basically objectively plot on my charts, because fundamentals usually are very subjective by its nature. But the way how we developed it is they look like indicators. So for instance, we use something that is called valuation. So you can have asset A that you can valuate versus that you can measure the strength versus gold, treasury bonds, or versus the US dollar. So it looks basically like an RSI, but it is based on fundamentals. So I use these tools to get biased in the markets. If I'm bullish or bearish, then I go to step 2, and then I use technicals to time the market, because fundamentals are lacking in timing. But that's why I have to use my technical tools. Then I use supply and demand with supply and demand, and I sprinkle in a little bit of price action to time the market, place my entry, my stop loss, and my target. So fundamentals to get biased, technicals to time it, and then I'll basically be in the trade.
Yeah. Inside this fusion, you've told us about a multi-asset strategy trading. Can you please tell us the, not indicators, but the fundamental points? Let's say inflows, outflows. You've told us about money market, treasuries. Yeah. So what is the fundamental indicator for you of the capital inflows or outflows between the markets itself? Let's say you
give an example.
Inflows in treasury market. So which market will be less or more interesting for you? Which your indicators, personal, that you maybe not indicators, but
forecasting tools,
things that occur when you trade. Yeah.
So yes. So for instance, when I look at the stock market itself, so equity indices, the Nasdaq, the Dow Jones, the S&P 500, the Russell 2000, so the US equity indices, then I look at what is really important for me are the treasury bonds, the 30-year treasury bonds. If I'm undervalued versus the treasury bonds, or overvalued. If I'm overvalued, I would expect the market to drop. If I'm undervalued, I would expect the market to rise. So and if I look, for instance, if I look at gold, if I want to trade XAU USD as a CFD, then I look at valuation versus, for instance, the US dollar, right? So it really depends on the market. Or if I look at, it's also interesting, if I look at currency pairs, if I look at the major pairs, the euro dollar, the Australian dollar, the Great British Pound dollar, then I look at valuation versus US dollar as well, and possibly versus gold as well, because they are both relevant. So I use usually these three markets to measure if I'm undervalued or overvalued: gold, treasury bonds, and US dollar. And depending on market, I put a little bit more weight on each of these each of these three assets, if this makes sense.
Does this model that you've mentioned previously involve crypto market or not?
Yes, actually, it's quite interesting. What I can do is basically, and I have a video actually on my YouTube channel. I forecasted with my tools the Bitcoin price, and actually it's on my YouTube channel, and it's funny because, first of all, it's sad because it got, of all my YouTube videos, it got the least amount of views. So that's why I never did a crypto video again. But actually what I did in this video, I was forecasting the Bitcoin low last year with the tools. And what I said is, hey, it's really important if what I did is basically I can plot Bitcoin futures at BTC, and then I'll check, hey, are we undervalued versus the dollar, and are we undervalued versus gold? And every time, and you see that in that video, every time we are undervalued versus gold and versus US dollar, we see a rally in price. And this is really powerful, especially for Bitcoin.
So in terms of crypto, you analyzing only Bitcoin or any altcoins?
No, for me personally, I only, what I analyze is everything that is available in the futures market. So in the futures market, I can add BTC and add ETH, so Ethereum, but I basically analyze Bitcoin, because anyway, it's like the mother of all cryptocurrencies. So it's the very, very strong correlation. I mean, you guys know that better than me. If Bitcoin rallies, then everything else starts to rally eventually as well. And if Bitcoin crashes, everything else crashes, kind of in a nutshell, right? So there's a strong correlation. So for me, it's enough to analyze Bitcoin, because Bitcoin I can trade also with nice liquidity on all the prop firms.
Of course, yeah. In terms of Bitcoin, okay, let's proceed. In terms of today's ETF, exchange traded funds, do you look at capital's inflow or outflows through the ETF or not? Or you measure Bitcoin only by your fundamentals, only by your two-step strategy?
Yeah, exactly. Only by I only look, so regardless of market, I literally only look at what I can see on my chart, basically the fundamentals and the technicals. That's it. I don't look at any other information. I don't need that. Okay.
And in terms of stock market, you've told us that you trade in indices, okay, but I saw in your blog and your Instagram and your social media that you also traded as shares, not only indices, like Walmart previously. You've told us a little.
Yes.
So can you please tell us what is the fundamental for you in this market? Is it earnings or something else or something more?
No, nothing. I don't look at earnings. I couldn't care less about earnings. So I don't look at earnings at all. What I look at the correlation versus obviously the equity indices, because what is an index is just a collection of bunch of stocks, right? So what is just really important? What is important is when it comes to equity indices, I look at something called market cycles. And when it comes to market cycles, in specific, election year cycle. So when it comes to election years, it's called presidential election year, right? So there are four cycles. We have presidential election year, we have post-election year, we have midterm election, and we have pre-election year. So in the market, the way how the stock market moves is literally based on these cycles, pretty similarly. So currently, 2024, we are in election year cycle. So what I'm looking at is at election year cycle seasonality and valuation. And then basically, if I know, okay, we're at a seasonal low and we are undervalued versus the treasuries, then it's one of the best buy points that you can imagine. And if we are at an election year seasonal high, and if we are overvalued versus the treasuries, then we can expect a drop. And this is very accurate. This is like super accurate. And this is how I add my probability.
Yes, we had it as an accurate fundamental indicator previously, but if we talk about this electional year, currently, this year, 2024. Can you please describe, is it undervalued or overvalued currently, US stock market for you?
Yeah, I can tell you what's going to happen actually. So beginning of March. So right now, the US equity indices, the indices, they tend to be right now a little bit overvalued, but the stocks are not yet following through. So the stocks are yet kind of around the mean. They're not undervalued, not overvalued, they're around the mean. So what is going to happen, I can tell you, we are going to get, so the prices, we're going to rally a little bit more. We're going to get overvalued on the stocks and on the equity indices even more. Then the market is going to drop heavily. The market is going to drop heavily first week, second week of March, most probably first week of March, because it's statistically proven that if there is a sitting president, Biden, running for re-election, then the market in election years tend to drop even heavier in end of February, beginning of March, until end of March. So I'll expect a really, really bearish March. All right. But then in beginning of April, we make a bottom, and then we start a big rally beginning of April, a big rally into the summer. And then summer usually is really flat. It's really flat. Then in around October, the market is going to drop a little bit. But then in November you have the biggest buy point. And then we're going to see a end of the year rally, November, December, super bullish. And we end up with new all-time highs. That's very likely to happen based on election year cycles.
Okay, very interesting about cycles. But in terms of Federal Open Market Committee and Federal Reserve, is it a coincidence or not that currently we are getting less and less probability of a rates cut? Is it your indicator or not?
Well, to be honest, I couldn't care less what the FOMC and what the Fed is doing. In my belief system, the market is in a predestined path. So the market is doing anyway what the market is supposed to do, regardless of what the Fed is doing, regardless of the FOMC markets. The market is doing what the market is supposed to do, and everything else is just that the news at the end of the day, the news outlet, they have something to, hey, the market is doing that because of X, Y, Z. But yeah, because right? They're telling you afterwards.
Yeah, Bernd, sorry. If we talk about ex-ante analysis and post-ante analysis, you think that in terms of this coincidence and this correlation between rate cuts, you find it as a coincidence, not as a rule, yeah?
Yeah, no, it's not a rule at all. No,
it's only a post-ante analysis.
Exactly.
Yeah,
exactly.
Of course, I understand. Okay, let's proceed from crypto and stock market to the market that our traders, I believe, trade the most. It's forex, it's currencies.
All right. Yeah.
I believe that from your speech, you value the first currency and you value second currency in a pair, and you just estimate it as undervalued or overvalued between these two currencies.
Yeah, look, when it comes to currency trading, I only trade major pairs. So everything that is linked to US dollar, right? I never trade. I cannot recommend everyone. I mean, I don't know what you guys are doing, but I don't recommend trading cross pairs like British pound, Australian dollar, or Euro, Canadian dollar, because
only between USD.
Yeah, only between USD. That's what I recommend. And because this is way more predictable, because otherwise you add one more layer, because these cross pairs, they depend on their major pair. So I would never recommend anybody to trade cross pairs, to be honest.
Yeah. In terms of this currency trading and trading to US dollar, you just overvalue dollar or undervalue dollar, or you have an in-depth analysis for two currencies in a pair?
Well, I would, for instance, right, if I look at the US dollar index, I could also say I could do the valuation model versus the euro, because right, US dollar index basket is the highest weighted currency is the euro dollar. But if I look at the euro dollar, I would look in my valuation model if I'm undervalued or overvalued versus the dollar, right? So it's really interesting, because if I'm undervalued versus the dollar, we would expect the euro to rally, and if I'm overvalued, we would expect it to drop. So it's also very, very accurate.
In this market, do you have your own seasonality or not?
Yes, absolutely.
Please tell us a little bit.
Well, I don't know the seasonality from top of my head for each and every market, especially right now, not from the currency market. But what is important is obviously that every single market, they have their own seasonality and also their own market cycles, especially the US dollar, because the dollar is so heavily linked to the US stock market that they also tend to have like similar, not in terms of behavior, but if I look at normal seasonality versus market cycle seasonality, so election cycle seasonality, you can say that election cycle seasonality is weighted heavier than normal seasonality, because again, because of the stock market correlations. It's really interesting.
If
so I would always basically, I'm sorry to interrupt you. I would always look at both.
Okay.
I would look at normal seasonality, and then I would look at election cycle seasonality, and then I would look at the difference and see if they are similar or if they are completely different. And then I would look at the past, like in terms of price behavior, if it more like moved like normal seasonality or election cycle seasonality. And what I experienced is basically it moves more like election cycle seasonality when it comes to the dollar and euro dollar, because it's the correlation of the stock market and the US equity indices.
Okay. In terms of this correlation with stock market and equity indices, is it only capital market as a stock market, or also a money market as a treasury market?
Yes, but treasury market again is a different animal. Is completely, you can just not compare it with each other. It's like you have to look at the treasury market by itself, right?
By itself, without correlation.
Without correlation, yeah, without correlation, yeah.
Okay.
I mean, yeah, without correlation. I mean, you can look at the valuation models as well there, but yes, you look at this basically without the correlation of the stock market.
So we proceeding from this market to the next one, commodities. You also trade commodities as well-known trader.
Yes.
Yeah. What's your favorite pair on commodities? Gold?
Yeah, I mean, I actually, you know, when it comes to commodities or like let's say precious metals. So when I trade I trade gold, I trade silver, I trade palladium, and I trade platinum. I trade all 4 precious metals, and I'll also look at copper, but I hardly get anything in copper. So I trade these 4 basically. But when it comes to all the ones that I trade the most often is basically gold, and for some reason platinum, because gold and silver are heavily correlated. Gold and silver is heavily correlated, right? So if so basically it's almost like Bitcoin in the cryptocurrency. If gold starts to rally, then you know none of these other precious metals, they're gonna drop. They kind of follow also gold. So gold is the mother of all precious metals at the end of the day. So I tend to look mostly at gold and look at my valuation model. I look at seasonality, and I look at what we haven't discussed yet. I look at CUT, the commitments of traders report. I look at this as well, at smart money and the retail money, at their behavior. By the way, when it comes to gold, have you guys, I'm not sure if you're aware of CUT, which is the commitments of traders report. That's really powerful in terms of whether the smart money, let's consider it smart money, is buying gold or selling gold, or whether, and this is really relevant, and maybe you have heard me saying this in previous podcasts as well, when I look at the retail behavior, and by the way, that's not sentiment, that's literally retail buying and retail selling. And in the futures market, you have that data available because it's required by law that all these parties, the hedge funds, the producers, which are called the commercials in the futures, they have to submit on a weekly basis this data.
Yeah, the form.
So it's the form. Yeah, so it's there. It's literally there. You just have to put it in a kind of an indicator form so you can read the data properly. And this is what we are doing with our CUT index. We call it CUT index. So I can literally see if the retailers are bearish or bullish positioned, not sentiment, positioned in the market. And what you can see, literally what you can see every single time, if the retailers are bearish positioned, gold is going to rally. And if the retailers are bullish, gold is going to drop. Every single time. It's
always against retailer.
Every single time. It's not only 70% accuracy, 80% accuracy. I would say it's even 95% accuracy. Retailers are always wrong when it comes to precious metals, and I can see that on that tool. So that's super powerful, and that's why I'm waiting always for like what I call then all stars aligned. When the smart money is bullish, the retail money is bearish, and then I go long or short vice if they're behaving vice versa. It's super powerful.
Nice advice. We are taking notes.
Yeah. This is super powerful.
And what about oil? Do you trade oil?
Yeah, I look at oil, but to be honest, I haven't found any, or I can't remember when was my last position on oil. So I look every week on, I do my analysis every single week on crude oil, but it's kind of going sideways. When a market is behaving kind of in this sideways range, looking at weekly, daily candles, and it's very choppy, very erratic, I really don't.
In oil,
I don't like to touch it.
It's hard for you to find some correlation between assets in oil. Yeah.
No, that's not. It's basically there is nothing significantly happening when it comes to fundamental values. It's nothing that I can say, wow, we are extremely bullish or we are extremely bearish. We are always kind of, the tools that I'm using kind of always contradicting each other, and there's nothing really strongly. I don't have a strong bias in this market right now. And on the chart, I can see also very choppy movement. So that's why I say I don't touch. But at some point of time, for sure, oil is going to be interesting as well. But right now, it's just for me, nah, there are better markets to look at. That's why I like, again, that's why I call myself a multi-asset trader. And I think it's important for other people also to understand they should not only look at one market. They should not only look at one asset. They should learn how to trade everything. The more you look at, the more opportunities you get. And I firmly believe as a trader, our goal is to find the best opportunity in one particular week on the best opportunity on one particular market, regardless of market, right? So that's why you need to have a huge selection of markets. I can only recommend people to look at everything.
So in your short-term bias, let's say you have in-depth weekly analysis and you choose only one market inside week, or it can be some other markets.
Well, on average, I would say I have one or two trades per week on average. So I would consider myself then in this case a swing trader, right? Because I have to classify myself. So I would say I have 1 to 2 trades per week. I execute only on the daily time frame. My execution time frame is daily time frame. I do, though, when I do my supply and demand analysis, I do like a monthly, weekly, daily breakdown, kind of top-down analysis. But my execution time frame is always daily. So that's why I consider myself then in this case a swing trader. And based on my rules, because I have very strict rules. As I said, I manage $4 million in capital. I take 1% risk on this $4 million, which is $40,000 per trade. So I cannot trade something a smaller time frame, right? Because I need price to give price a little bit of wiggle room or like leeway, like to move up and down. I need that for my portfolio. So that's why swing trading, daily execution, 1 to 2 trades per week, and this is more than enough.
Okay, let's talk a little bit more about your own strategy. You've told us that you have 1% risk and you never go lower than 1 day, yeah?
Yes, daily charts. That's my execution time frame.
Yeah, only daily charts. But regarding our community, it's more like intraday traders who trade 5 minutes, 15 minutes, 1 hour. I think it would be interesting to hear from you. Why don't you do that? And what is your average time in trade? So let's say if you have 1 day time frame and your trade is a medium time of a few days, or it's inside some day or inside a week.
No, it's a few days. It's few days. So I would say, yeah, a few days. So it's between 6 days and 22 days, my holding period. Okay. 6 days and 22 days. Yeah. So 1 week, let's say 1 week to 3 weeks is my 1 week to 3 weeks is my average holding period per trade. Now, yeah.
What's your average risk reward for such positions? Because it's fundamental.
Yeah. So anything between 1 to 1 to 1 to 4.
1 to 1, 1 to 4. Okay. But in terms of your trading, why we know you and why you are so very well-known trader inside our community, a lot of our traders trade prop firms, as I've mentioned, and you are known for being in a leaderboard for consecutive how much months?
On the top of the list was 3 months in a row. like
Yeah.
on the number one,
And
3 months of, I don't know, like a lot of months. I don't know. I don't look, I never counted. You know, when it's, because when FTMO announced that I'm their all-time record holder, 120 times leaderboard appearances, I was surprised. Well, of course, I was surprised as well, because I don't. Why would I count? I don't even check. You know, I wouldn't even look when you trade. It's not like that. Okay, I have to open the leaderboard. I have to be in the leaderboard. No, this would be stupid behavior. You just, you know, you trade based on your rules. You trade based on your KPIs, risk to reward, win-loss ratio. That's what you do. And if you appear on the leaderboard, great, perfect, congratulations. But it doesn't mean anything at the end of the day, right? It's just, hey, do I make the money that I want to make? Yes or no? Leaderboard is just like the icing on the cake. Who cares? But of course, I didn't know.
Okay. So now we know the average time of your position, but the quantity of these positions. Can you simultaneously trade a few markets and hold a few positions? What is your average number of positions inside, let's say, these 2-3 weeks?
Never more. I think I never open more than 3 trades at the same time. So I never have more than 3 trades at the same time open. 3 trades, I would say, is the maximum.
So let's say your average, your not average, maximum risk for a month is 3%.
Yeah, could be. Yes. If yeah, could be. Yeah.
Yeah, that's nice. So regarding your strategy, previously I watched your interview and you told us about your targets, and you can change your target and you have an imaginary target.
Yes, good call. Yes, you really watched it. Nice.
Imaginary target, because that's the one question, that one of a list of questions I'm here to ask, and I hope you'll answer for our community. What is the imaginary target and how you operate in terms of this target?
So how I operate and how does this look like? So let's assume now. So most probably a lot of your traders are well aware of supply and demand, right? Yep. So, or trading also supply and demand. So let's assume now US stock market. So the Dow Jones, US 30. Let's assume now it's dropping into beginning of April. Then I'm heavily looking to buy because I expect a rally into summer. So now, if I'm then in the trade, I was undervalued, I'm buying in demand, ideally weekly demand, daily demand execution covered. So the daily demand is covered by the weekly demand, what I call big brother, small brother principle. So I'm undervalued, I'm executing on the daily is covered by the weekly chart. Now I'm in the trade. Now a normal trader, supply and demand trader would, hey, I'm in that trade, I have to exit at maybe the opposing zone, which is the next supply zone. I enter in demand, I exit in supply.
Sorry, Bernd, you call it conservative target, yeah?
Yes, that would be a conservative target where I say I enter in demand, I exit in supply, right? Yeah. That would be a conservative target. However, now I don't have a target in place. Now I'm in the trade. But if my valuation model, for instance, and my seasonality, my election cycle, or my election cycle is still not pointing to the downside, meaning I'm still not overvalued, I still haven't reached a seasonal high, I'm staying in the trade. Because for me, the fundamentals, they cause the market to shift, to cause the bottom and to cause the top, right? So I would not exit. So previously I would exit at supply, but now, since I'm more experienced and I can follow my fundamental tools, what I'm going to do is I stay in the trade and I'm waiting for my fundamental tools giving me the sign to exit the trade, right? So that's basically then my quote unquote imaginary target where I'm like, okay, I'm waiting just for my fundamentals to really guide me when to exit, because my fundamentals will let me be in the trade longer than my technicals.
From your experience, what is the probability of getting this move you're expecting until your imaginary?
Oh, they are now super high. Now, you know, I'm still sometimes, you know, surprised that I still exit sometimes too early, because I'm like, hey, I now got my 1 to 2, 1 to 3. Let me exit because I make a really decent amount of money, and then I'm like, okay, let me exit at 1 to 2, 1 to 3. And then I look at my fundamentals and I see price continues to rally, and I'm like, oh, I could have stayed longer in the trade. So I would say,
your experience, are you still feeling this fear of missing out, this FOMO?
FOMO, well, so yeah, yes, I would say yes.
Okay.
I don't feel so much FOMO, to be honest. FOMO, I don't feel so much, but what I feel is, you know, when you exit a trade, I personally, and I said this also in one of my previous podcasts, I'm a perfectionist. I'm kind of never happy. You either, you know, because what we all should do is, once we exit the trade, we should basically not just leave that chart and then never come back. We should always basically log these charts and look back 1 week, 2 weeks, 3 weeks, and see how price behaved, right? By logging and journaling, this is how we learn and how we can tweak and fine tune our strategy. Otherwise, you don't have any kind of understanding of what you can do better. Only by logging and journaling, you basically can become better. So by looking back, so by looking then in retrospect at looking at my charts, I'm like, I'm never happy, basically, right? So it's like either you exited too early, then you're like, oh, I left money on the table, or you exit too late and you're like, oh, I should have exited, and then you take away not enough profit, not enough, or you could have made more money, right? So it's like trading, and this is what everyone has to learn, and me myself as well, is far from being perfect. Trading is the most unperfect activity profession that exists, because at the end of the day, it's just about meeting our KPIs, our risk to reward targets, our win-loss targets, and then everything else is just, you know, noise. It's not, there's hardly, you can hardly achieve the perfect trade. And if there's the perfect trade, you get this once, but anything else is just, you know, taking a little bit from the apple pie, basically. But there's not such thing that, you know, always being perfect. It doesn't exist. And I'm still personally struggling with that sometimes.
So watching these moves to your imaginary target after closing the trade, does it give you confidence to behave more aggressively next time?
I would not call it more aggressively. I would more like call it just leaving the trade alone and not touching it.
Yeah.
Right. Not trailing to close, leaving my stop loss at break even, just like not moving at all and just letting price do its thing, because I would expect price to go to the imaginary target. And by the way, what I just wanted to say, it's of course we are all risk managers, meaning we have to properly protect ourselves. So when price, for instance, goes at 1 to 2 or 1 to 3, we cannot, if price comes back unexpectedly, we cannot go back to basically losing money. If once price moves in our favor, we have to protect ourselves. So everyone has to have rules in place where we say, okay, let's assume price moved 1 to 1 in our favor. Then let's move our stop loss to break even. Or if we are 1 to 3 in profit, let's protect 1R, right? So we always have these measures in place to protect our capital. This is the most important rule: protect our capital. And if we can protect our capital, the profit will come by itself if you follow your rules.
Of course. So the break-even is a part of your strategy.
Yeah, 100%. Yes, I had a lot of break-even trades in the past 6 months as well. So because then when I move my stop loss, usually my rule is, okay, at 1 to 1, I move my stop loss to break even. If price comes back, then I'm out.
50-50.
I might,
yeah,
exactly. I might look to re-enter if my fundamental values haven't changed, but it's not necessarily happening. But yeah, I'm just then, you know, out for break even. It's really important. I cannot, if I'm already profit one-to-one, I cannot lose money anymore. That would be you would be a bad risk manager.
Same thing for me. Yeah. If you, let's say you have break even, you told us that you have a lot of break evens, but after break even, if you have fundamental, you can re-enter.
Yes.
How often do you re-enter after break even? The percentage?
Oh, I don't know. To be honest, I don't know. I don't have this. I don't have these statistics in my mind. I don't know. It's only basically, but as a rule, is if the fundamentals haven't changed, I am allowed to re-enter. If they changed against me, then I'm not allowed to re-enter. Right? That's my rule.
Okay, we talk a lot about your experience, but can you please tell us your first steps in trading? First of all, from which area did you come from, and how you've been involved in trading, and the first steps you've made? Have you lost a lot of money in your start as a trader or not?
I think, well, having lost, so first of all, let me go back in history first, and then I can answer the other question. So as I said, so I started trading 12 years ago, and 12 years ago, the trading world outside was a little bit different. There was not so social media and YouTube heavy. Basically, I didn't even know that you can get education online back then. I didn't even know if like proper education online existed. Anyway, so I got physical training from former floor traders, one from Chicago Mercantile Exchange, one from New York Stock Exchange, and one from Chicago, who was one of the biggest natural gas futures market makers back in the day. So I got physical training from floor traders back in the days, and I think getting this physical one-to-one coaching as well helped me really to accelerate my trading journey and made it rather smooth compared to what people experience nowadays. Because what I see nowadays, that people struggle much more than I did back then. So again, by the way, I don't consider myself benchmark.
When you say struggle, you mean struggle to lose money or struggle to open some trade?
No, struggle to become consistently profitable. They're way longer in that roller coaster ride, making a little bit of money, losing money, making money, and doing all these strategies hopping. So one week they try one strategy, another week they try another strategy. You know, they have tried within a year, they have tried 10 different strategies, and nothing seems to work, and it frustrates them like crazy. So that's what I experienced with a lot of people nowadays. So I had kind of, well, the luck, or I don't know, but I back in the days, because there was not so much information. I guess I was just lucky, because when I started, there was just not so much information out there, right? And you had to go to a physical place to learn. Nowadays, the inflow of information is just crazy. If I had to learn nowadays, it's like, where do I start? Where do I even start, right? It's like
you have a lot of courses, you have a lot of
like who to trust, who to go to, what strategy. And by the way, what I really believe, and what is really important. So you said. So I don't know the how old your like on average the age group.
On average, I think between 25, 45, 25, 45.
Okay, so when somebody is I think when it comes to the first step into trading or learning how to trade, I think first people have to realize or think about what fits to their lifestyle, because a lot of people, let's assume people just like they want to do scalping or they want to do day trading, but at the end of the day, maybe they have a full-time job, they have family, they have social obligations, they have, you know, they have maybe even kids, whatever it is, they are busy throughout the day, right? So if that day trading or scalping doesn't fit to their lifestyle, I would not even try it. You cannot, trading has to fit into your lifestyle. It's not, you cannot make trading fit. You cannot make trading fit if it doesn't fit. So first of all, if you're like, or if you're a student and you have all the time in the world, hey, then do day trading. If you have 8-9 hours a day free time, do day trading, right? Go and do day trading. But it really has to, your first step is basically you have to think about what fits to your lifestyle. All right. And most people, they have this misconception. They want to do day trading, but actually they don't have time, and then they are super stressed, and you know, it just doesn't work that way. So yeah, I answered, I think, most of your questions. But when
any psychological issues that you faced or not?
Face right now, or that I faced?
No, previously in your career of trader.
Oh yeah.
Maybe sometimes you had some losses and tell yourself.
Yeah. So I think what I had to learn is that going from being very money-centered, very money-focused, at the end of the day, we all want to make money, right? When it comes to trading, that's why we also start. Money is a big factor why we want to trade. But going back, being heavily money-centered to more like process-oriented, focusing only on, hey, I have to achieve my KPIs, my average risk to reward ratio, my average win-loss ratios. These are my two most important KPIs. Actually, my only KPIs in trading: risk to reward, win-loss ratios. If they are on point, if they are green, then I'm making money just by money is just a result of meeting your KPIs. And then what I was basically that kind of that step from money-centered to process-oriented took me also a while, right? Because we are all money-centered at the end of the day. But if I can guarantee you, if you stop being money-centered and you are more process-oriented, you become a better trader, because then you follow your analysis. You're not led by your emotions, by fear and greed, because that's why we become FOMO, and that's why we have, you know, we over leverage ourselves and we do all these stupid mistakes, moves our stop losses because of money, because we are emotional human beings. But if we start being more process oriented, we'd stop doing all these stupid things. So that's why I can encourage everyone to slowly get into that process oriented trading versus that money focus. And then your trading will also get better. And this is what I also had to learn.
In terms of your assets under management currently, you told us that you have 4 million in prop firms and 2 million your own capital that you trade, yeah?
No, it's actually, so it's 4 million of prop firm capital, but 2 million is A book. So basically, right, okay. The prop firms, so prop firms are usually B book, which is virtual funds. It's like you're trading demo, right? But 2 million of that 4 million is real funds from a prop firm, like real money that I manage. And I have my own rules for that. Yeah.
Yeah, I just try to ask you about this psychological issue. It's so hard for some traders to grow from someone who trades not real money, trades real money. Is there any difference in your strategy and in your head, let's say, by trading not real money and the real ones?
No, not really. Yeah, for me, just a number. Yeah. So first of all, to answer your question in two different ways, I firmly believe that people really, when it comes to, regardless of virtual funds or demo account, prop firm demo or real funds, it doesn't matter. People have to get used to bigger numbers slowly, to more risk slowly. What I experience nowadays a lot is that people coming from trading their own funds, let's assume $100 of risk, all of a sudden taking $100,000 challenge and then passing that challenge, and then from $100 of their own money risk, now all of a sudden risking $1,000, right? That's if like
1%, of course, yeah.
It's a 1%, yeah. They might take even 2%, which is $2,000, which is even worse. But my point is that step from $100 risk to $1,000 risk plus, you cannot just, you know, it's a different ball game. You behave. Yeah. That jump is too big. That jump is way too big. So that's why I teach my students, for instance, to slowly increase the risk. You cannot jump. You cannot do from 0 to hero, from $100 to $500, from 500 to 1,000, from 1,000 to 2,000. And then you slowly get used to these bigger numbers, and then you get numb to these bigger numbers. Because even me, you know, when I trade now $40,000 risk per trade, if I now took $400,000 risk per trade, I would also be more shaky, you know, I would also not be so numb, because I also have to get slowly used to these bigger numbers. And this is like a challenge, I think, a trader's challenge for the rest of their life, because we continuously want to scale up our business by increasing our funds. That's the job of our trader. And we are not playing with the risk. We are not playing with the amount of trades that we take, because it's always quality before quantity. We are doing everything the same way. To make more money, we just increase our funds. And by increasing our funds, our risk just by default automatically increases, right? So, and then we slowly get used to a little bit to more risk, but we have to do this slowly. This is really important. Otherwise, it's just a recipe for disaster. It's a recipe for wiping out your account, because you cannot emotionally manage so much money just all of a sudden.
Yeah, I asked a question, and you developed it into the further one, into more wide question. Yeah. But still, it's I think it's very useful, because someone who just newbie in trading, he's for a newbie, for someone who just arrived in the market, it's not possible to go in trading by trade your own risk of $100, and in the same day you take your challenge and you trade 1% risk, and it's $1,000. Yeah,
it's impossible.
In terms of these prop firms we are talking about, in terms of the deposit they give us, currently this sphere faces a lot of difficulties due to regulation. Do you see them? Do you see them as a future instrument? Will they stay on the market as an instrument for making deposit for a trader who doesn't have its own?
You mean like prop firms, are they here to stay? That's your question? If prop firms, up 100. So I can keep that answer short. Yes, prop firms are here to stay. They will actually eventually, even still, I believe they may make a real broker somehow obsolete, meaning why would you trade your own money if you can trade prop firm money? But it's almost, I like the analogy with the crypto market, that back in 2016, when like there were so many crypto scams, and at some point it has to, the market has to clean itself, and the bad apples fall from the tree and only the good ones will survive. It's the same with the prop industry. So it's booming.
The prop industry just has to clean itself.
Yeah, it just has to clean itself. It's like wild west. There will regulations will come. It will clean itself. The bad ones will vanish, and then you have the good ones that you can basically use to scale up your business and trade. So there's no need to trade your own money anymore. I would always consider myself as a prop firm ambassador. I love prop trading, right? So yes, you just have to make your homework, due diligence to not just use any prop firm, to use like a new established prop firm. Look who is behind that prop firm. Take these established prop firms. They are big prop firms, and then you are good to go. So you don't have to worry.
Okay. I'll dare to ask you another question.
Yes.
I think maybe it will be inconvenient. You can tell me. So in terms of trading prop firms today, what are the prop firms you are currently working with?
No, I can, it's not inconvenient. I can say this. So first of all, I'm always, people ask me, hey, Bernd, what prop firms do you recommend? And I always say, I don't recommend any prop firms, because I'm not affiliate. I'm not affiliated with any prop firm. I want to say this, stress this in the beginning. I don't recommend, I don't tell you do this or that. I can tell you what I'm doing. So I'm trading FTMO, I'm trading Search Trader, I'm trading True Forex funds. They're back now. Hopefully, I'm still waiting for my payout to be processed. I'm trading Funded Next, and I am trading VST. This is the private. So this is the private. VST is the private prop firm, which is by invite only. This is where I get the 2 million basically. So in total 4 million. And what I'm going to do now, I cannot announce yet which prop firms, but I got another $600,000 challenge value, and I do another prop firm challenge live on YouTube. Basically, what I'm going to do, I call it YouTube challenge documentary, where I record every single day and showcase how I trade and I'm telling people why I'm taking a trade, and I'm recording every day, and then I publish it on how I passed the challenge and publish this on YouTube. I did this before with my Funded Next challenge and True Forex Funds challenge. It was like perceived very well. People liked it, so you can check this out on my channel. So it's really cool. So I do this again with like another $600,000 challenge value.
That sounds very interesting. That sounds interesting. Yeah, thank you. And in terms of this payout, you've mentioned True Forex Funds and that you face some problems of payout. From your experience, let's say, okay, you're a trader who had a lot of payouts. Did you face a lot of problems when the payouts ratio was very high and you didn't get your money?
No, I personally never faced, to be honest, knock on wood, I never faced any issues, to be honest. No, me never. That's I can answer that short. I never had any issues. But I kind of I'm very, as I said, I think I was also, or I'm very selective when it comes to prop firms. And to be fair, from True Forex Funds and Funded Next, I got these challenges for free to make these YouTube documentaries, these challenge documentaries. The only challenges that I ever bought was Search Trader and FTMO. That's it. So everything else I got for free, and then I basically, yeah, that's how it is. But I never faced any payout issues.
Okay, Bernd, thank you for everything. I think that's enough for today. And once again, greetings from Ukraine. Thank you for sharing your experience with us.
Well, thank you for having me, and all the best to Kiev, Ukraine, and yes, I'm available anytime if you guys want to chat. I'm happy to join again. Thank you so much.
Maybe as a conclusion, you have some questions from your side for us.
Well, yes. I mean, I didn't know about so what kind of community are you? Because it's like, is it because you said Forex, but also like crypto heavy community? So are you doing everything? So how does it work in your community?
First of all, we are the community, not only, first of all, that's an educational community, educational project, where we educate people as you to trade markets. And we have 6 different, let's call them departments. We have like both online trading and offline trading that you've mentioned that you start with. And besides it, we have an intro that's Discord server you are currently in, and there we have a community of traders who are already making money from the markets and who are passing their challenges and who trade their own money and prop firms money. And in terms of markets, I believe that the majority trades Forex, but in our philosophy, there are, as you said, multi-asset traders, because most of our traders, they trade both crypto and conventional markets. So
that's good.
We have no the statistics exactly, but I believe that the majority trade currencies, and I think that 30-40% trade crypto. Yeah.
Yes. So it's now one. I have one more question that really curious. Now prop trading, or like, is this now also rising in the Ukraine, in Kiev? Is really popular? Like, it's like everywhere, or is it not yet popular?
More than you believe.
Okay.
More than you believe. Currently, I have no clue how much Ukrainians are passing challenges in prop firms, but I believe that I've never met one who didn't even try it, because anyone who is in touch with the market, even crypto market, they try themselves in these challenges in Forex, Yeah, and the most convenient instrument for it, for trying themselves, for touching this market is prop-firm.
Yes. And yeah, it's a no-brainer, right? You get funded for a fraction of the money that you can then handle, manage. It's a no-brainer for everyone. And it gives you, and even people who are a little bit undercapitalized. I mean, it's perfect for everyone, but people who are undercapitalized as well, they can manage if they are skilled. So nowadays they just have to be skilled. Not having capital is not an excuse anymore for not being successful in trading, because you just have to be skilled. You just have to learn trading, and then you can use prop firms to showcase your skill and then make money. That's the best. It's a win-win situation for evereveryone.
We have a lot of examples. We have a lot of examples where we have some guy who has I'd say $1,000 capital, and through payouts he makes it to 100,000 capital.
Yes, crazy. Yes. And this can change lives. It can change lives. So that's why I can also, to my last words, I can encourage everyone to get skilled first, get properly skilled. Don't care about money. Money comes when you are skilled. Don't rush into things, because eventually you will lose, right? If you're not skilled, eventually it will bite you in the butt. You will lose. That's the market, right? So become skilled. Give yourself some time. It's at the end a marathon. It takes time. You're learning a new profession here. That skill trading is like any other profession. You're learning that profession. It might take years for some, but if you're skilled, well, then you can leverage with prop firms. So yes, so take your time, ladies and gentlemen.
Thank you for these kind words.
Thank you. Thank you for having me. Bye-bye. Take care, guys. Bye-bye.